Welcome. Welcome, traders. Welcome to another live Q&A session with Oliver Velez. My name is Oliver Velez, of course, and I'm your trader for life. That's right, guys. It's that time of the week again. It is Monday. I'm on the heels of a very successful 3-day live trading camp. Some of you present might have attended that. We had a wonderful 3-day period, Saturday, Sunday, live trading today, Monday. And the traders nearly 400 traders who participated with me in that dynamic live trading camp will be also experiencing an additional 10 weeks with me trading live. So it was a phenomenal time. I'm a tiny bit tired, but did not want to miss this opportunity to do our Q&A session this weekend. So anyway, welcome, guys. Tell me where you're coming in, where you're piping in from. Let's give some individuals an opportunity to log on and get settled here. So what country are you piping in from? What city are you from? All right. Andrew, glad you loved the live trading camp. Awesome. Corey, yes, an epic 3 days. We had an epic 3 days. It was wonderful. All right. All right. So looking forward to this, guys. Looking forward to this. Utah, Bogota, Malaysia, Toronto. Wow. Manila, Philippines. All right. My favorite dessert. Favorite dessert is wine, actually. Wine is my weakness, guys. That is my weakness. All right. So whenever I have a hard time, keeping myself fit, it's really because of wine. I'm telling you. I'm not a huge dessert drinker, but I am susceptible to having just a bit too much wine. So, wine metabolizes as sugar, so it's very difficult to keep yourself in shape if you if you go overboard with wine. It metabolizes as sugar, and so it's sort of like a dessert. You got to keep that to a glass or two and be done with it. But that's my weakness, guys. We all have them, right? We all have them. But you live only once, too. All right, guys. Wonderful. Interesting time in the markets. We are having such an interesting time in the markets. And so I'm anxious Alex, thank you for being here, guys. Thank you. Thank you for being a part of our program. Interesting time in the markets. Interesting time in the world. Interesting time with individual stocks. Guys, we're in an epic week, right? Let me tell you why we're in a very epic week, and then I'll take some of your questions, right? So we all know what the macro landscape is, what we're dealing with in the macro landscape. So many very important things are coming together simultaneously at the same time. We have runaway inflation. Now, the stated inflation rate is 8.5%. We know that's a joke. It's closer to 20%, actually, and I believe it's going higher. I also believe that heightened levels of inflation is probably here with us to stay. I think that is partially by design because the United States is, in particular, in a great deal of debt. Their balance sheet is too high, but the debt has to be either taken care of through the heightening of the increase in taxes, which no one's going to approve that, or the growth of the economy, but the growth of the economy is very difficult because of what's happening on the political landscape, on the geopolitical landscape. Economy sort of slowing down because of the supply chain issues. China's going into lockdown again, which is going to further exacerbate the supply chain issues. All of these things basically mean that there's a possibility of recession coming. And so we've got a scenario where inflation is out of control. All right, our Federal Reserve did a horrible job at staying in front of this. And as a matter of fact, in my opinion, they should really resign. It's that bad of a job, right? Because first inflation was transitory, then it was inflation's good, and then it was, oh no, inflation is the fault of the greedy corporations, and then it was, now I think the rhetoric is inflation's Vladimir Putin's fault. So it's just this constant passing the buck, getting it wrong. But we've got runaway inflation. We've got a hawkish Fed because of the necessity of being hawkish, not because it's a good thing. We've got supply chain issues applying additional pressure to prices. We've got a slowing economy. We've got a pullback on quantitative easing. We've got a geopolitical war that's going on that is further adding to the scarcity of certain things, which is adding additional price. So all of this uncertainty, on top of that, guys, we've got a risk-off market environment as a result of all of that that is extraordinarily punishing to any small thing that's off. So if a company like Netflix is off by one or two things, it gets cut, by 30, 40%. It's not a 15% haircut. It's not an 8% haircut. It's a 30, 40, 50% haircut. And so we're probably in one of the most important weeks of this quarter's earnings season, right? Because we've got, I think, Microsoft's earnings coming up. We've got Apple's earnings coming up. We've got Google's earnings coming up. We've got Airbnb's earnings coming up. We've got Meta's earnings coming up, formerly known as Facebook. We've got some of the oil companies going up, which is going to be interesting, Exxon, Chevron. We've got Airbnb's earnings coming up. We've got some really powerhouse earnings coming up this week, which I think is going to set the tone for whether the market becomes more risk off or the market just sort of feels based on these numbers that, everything is already priced in, that the market's declined far enough for it to have priced in all future interest rate hikes by the Fed, and the market's anticipated the slowing down of the economy already appropriately, so we don't have to become more risk off at this point. So it's going to be interesting. In addition to why that's interesting is that, as we know, Bitcoin has specifically had a very high correlation with the NASDAQ in particular. And so the NASDAQ has been a leader, and sometimes Bitcoin has been a leader. And it doesn't really matter which one is which. It started off with Bitcoin leading the pack and the NASDAQ following. Now it seems like they're in lockstep, although that linking is starting to break down very, very gradually. Marginal breakdown, but the breakdown or the dislinking of the correlation between Bitcoin's activity and the NASDAQ's activity is starting to break. Now, over time, Bitcoin has almost has a very low correlation to the stock market, has a very low correlation. Over time, it's an inflation hedge. Over time, it has practically zero correlation. In short periods of time, it can link on. But over time, it has almost a zero. And this is what a lot of people, I think, miss about Bitcoin. So it's just going to be a fascinating week, big earnings week. We've still got a lot of stuff happening on the geopolitical front. What else? We've got New York potentially banning proof of work mining. We've got the second nation in the entire world having just adopted Bitcoin as legal tender. It's so much going on. And I just finished my 3-day live trading camp. Boom. All right. So guys, exciting times, guys. Exciting times. We're watching history unfold ahead of itself. No one's really been here. We're in unprecedented territory, guys. No one's been here. We've read about these things. I've studied these things. I've never seen a scenario where all of these things are coming together at the same time. I mean, I barely know a high inflationary period. I was too little back in the 70s to really wrap my hands around that in the early to mid 1970s. I remember, but I've never really truly as an adult experienced that. So interesting times. Oliver, okay, Salil, I believe that's the name. Salil's asking, Oliver, what's the secret to entering into the first bar of the day? All right. A lot of people know that I monitor the first 2-minute period of the market day very closely. That is a very important key to my rapid ability to grab gains quickly by properly reading that first 2-minute period. So Salil is asking, Oliver, what's the secret to entering into the first bar of the day before even the 2-minute period is finished? I never managed to get that right, he says. What are the scenarios? Well, the key scenarios to getting this right is what I'm looking for in that first 2-minute period is I'm looking for power and velocity. You see, a 2-minute bar can grow, but there are different types of growth. It can grow although it's struggling to grow. It can grow with power, umph, and certainty. And it can grow kind of gradual and smooth. I want that power. I want that punch. I want that I'm raring and roaring to go bar. Let's go. Let's get this done. All right. That's the type of 2-minute bar I'm looking for. Now, so it's velocity and power of the bar, how the bar is being formed. In addition to that, I'm looking for that power and abruptness, that unmistakable oomph. I'm looking for that to originate from several very unique positions. So it becomes power and position, the two P's. I want power in the right position. Okay? And when I can link those two, when I have power that is originating from a right position, as an example, power that's originating off of a flat 200 period moving average. Wow! You know what I'm saying? So that's a scenario of, power and umph originating from a nice position. Go. The two P's. That's your key. All right. Okay. What else here, guys? What else? Martin wants me to give a price target on Mara. Now, I don't like to do price targets, especially in sessions like this. But you know what I'm going to do? I'm going to take a look at Mara for you. All right. And let's just see what we see on the chart of Mara. And I'll look at several time frames here. So right now, what we have is Mara Digital Holdings. This is a miner. Now, one of the things I think is important to understand about miners is that they tend to triple to quadruple the actual underlying thing that they mine. So miners have a great deal more volatility than the asset or the commodity that they mine. So for instance, gold has a certain volatility rate. We call a vol rate. So gold has a certain volatility rate, but the miners have a much higher vol rate, much higher volatility rate, and it's typically 3 to 4 times. And so when you want extra umph from an investment point of view in something like a commodity, you want to time entering their miners properly, because you're going to get 3 to 4 times the gain from a miner than you would the underlying asset. This is the case with Bitcoin as well. So miners, when Bitcoin starts rocking to the upside, miners will tend to follow and outperform the underlying asset, Bitcoin, which is the mined asset. Why Bitcoin is a little different in this regard is because it's true mathematical provable scarcity, which makes the asset far more rare, far more precious, and far more desirable than any other commodity that exists, any other asset that exists. And so it is better to accumulate that asset itself versus trying to play something else that is not the asset. See, for gold, I'm willing to do that. I'm willing to play the miners and sacrifice owning the asset itself. But I'm not willing to do that at the expense of owning Bitcoin because, in my opinion, Bitcoin's going to ultimately outprice us. And we're going to wish we had these prices back again in the past. And so when Bitcoin's 300, 400, 500, $1 million a coin, the conversion rate of your fiat into that is going to be very minimal. So I don't want to waste time playing something else that will sacrifice my ability to accumulate this aggressively at this particular point. But it's good to know this, that miners outperform the asset, but they don't always move in lockstep, right? Sometimes they do. So sometimes the miners lag the asset. A lot of times they lag the asset, but they do tend to outperform. Now, what I see here is that Mara is obviously down a whole lot more than Bitcoin from a percentage point of view. But again, that's because the miners are more volatile. I also see that Mara has broken down, whereas Bitcoin has not broken down, right? So there's the breakdown. Bitcoin has yet to do that, okay? So Mara is significantly weaker than the general asset itself. So from a basic point of view, guys, you've got to clear this. Just from a basic point of view, you've got to clear this. Otherwise, all we're in is a very predictable sideways pattern. Okay? Now you can break this a little bit. If it snaps up relatively right away, then you don't really consider these peekaboo breaks. I would like to see it hold, but you're really going to use Bitcoin as your leading indicator for this miner. So only after, guys, Bitcoin experiences a very powerful surge to the upside are you going to start looking at the miner. All right? You want Bitcoin to lead the way in this case. All right? And you're going to have to clear this before there's any significant chance for moving back into this zone or that area. All right? Otherwise, you're just in a predictable sideways pattern. Now, I teach my traders an accumulation style of market play where if you really believe in this in the future, you start accumulating on the way down. All right, like from a price like now, you start accumulating on the way down if you believe that ultimately we do wind up back here over time. But from a technical point of view, you're going to wait for some significant move above these highs. Now, I'm not going to tell you what I think this is going to do, but let's assume that this is too far to assume a brand new high. You have to go too far. So what you do is you cut the space up from your breakout into half or halfway, right? So you always use the 50% mark as the more conservative profit take or profit potential. You split the space in half. And so from here, you can go there. Maybe you get a double. All right, maybe you get a double. All right, now you can play early in here if you get something that clears a good portion of the bottom portion of this, but this is the real breakout. But you can play in here, but you need something powerful in there to play it. You need something that suggests that this has changed. You need something to break the back of the weakness, like one giant fat bar like that would say, wow, we haven't ever seen that. So now you can start playing this before the breakout, and you could get maybe a little bit more. Anyway, that's the way I see it. When something is really far away from the high, I go for the halfway mark. That's what I do. All right. Okay. Oliver, what do you use to trade crypto? I remember you mentioning your animosity toward platforms like Coinbase. Yes, first of all, I don't trade Bitcoin. All right. There are certain assets or plays that are not trades. I don't trade Bitcoin. I accumulate Bitcoin. All right. And I believe that Bitcoin is still in its infancy, and so therefore it still should be accumulated, okay, not traded. I have a zillion things I can trade without having to trade that. So I use all pullbacks, all collapses, basically as opportunities to accumulate. Now, if you're asking me where I do that at Swan Bitcoin predominantly. I have a Coinbase Pro account. And yes, there are times I still place certain trades on Coinbase, which are limit trades. So I'll place buys down a price before the price gets there. That is something right now that Swan Bitcoin does not allow. But I strongly, I lean right now towards supporting Bitcoin only firms. And Swan Bitcoin is a Bitcoin only firm. I do my best to support all Bitcoin only firms when I can, guys. All right. And I'm going to take you to this really fast here. And if you are interested, there you go. That is swanbitcoin.com/OL Velez 007. If you do that, I think we both get some free Bitcoin. And I'd strongly encourage that you do that. Okay. What else here? What are we doing? Is there a special setup or screener, 1D, to determine potential boom stocks for the next day's open? Do I use screeners to find my plays? No. I don't. And I'm not flipping for my plays either, like you see a lot of traders do, flipping through a long list of stocks. I teach my traders that their stock watch list, their daily trading list, should be no more than 10 symbols. It should be no less than 6 and no more than 10. The professional is not, I look at the whole market. Professionals don't trade that way. Professionals trade things that they trade virtually every single day. They trade things that they are absolutely intimate with, familiar with. They trade things that they know like the back of their hand. They don't just search for where the opportunity is. The same way a New York Stock Exchange specialist is in the pit and trades one thing. Just because he hears some noise at another pit, he doesn't leave his pit and go over there and trade. He trades his one thing. This is what he knows. This is his life. This is his bread and butter. This is his baby. This is his child. This is more of a professional approach than where's the news, where's the action, can I scan for what's in motion? That is more of a novice approach to the market. Professional traders understand that the action always comes to their stocks. Every stock gets its day. Every stock gets its momentum. Every stock gets its breakout. Every stock gets its uptrend. Every stock gets its downtrend. Every stock gets its momentum, its power, its moves, its excitement, its earnings, its gaps. Every stock gets it. So what you should do instead of being a searcher is you should sit back, stand still, and be a waiter. The searchers are on the novice side of the game. The waiters are the professional side of the game. All right? And so trading shouldn't even be called trading. It should be called waiting. You're waiting for your opportunity to occur in your stocks. Most novice traders don't even have their stocks. They think they're supposed to trade the market, but you're supposed to take the market and carve out your market. You're not supposed to play the whole market. That's ridiculous. You're supposed to carve out of the market your individual market. You're supposed to have a small little market that has your name on it. This is my little 10 stock index, or my 6 stock index, or my 8 stock index, your index. And you're supposed to know them like you know your children. Know when they're lying, know when they're happy, know when they're sick, know when they're sad. You can't do that if you all of a sudden the activity is over here, but I don't even know what this stock does. That's not how you play this game. And so you've got to have things you play already set up. Like I play these 4 things, these 4 events I play. I play these 4 events when they happen in these 6 stocks. You understand? And so now you have the 6 stocks, right, staring you in the face, okay? And you're waiting for any of the 4 events to occur in any of the 6 windows that are looking at you. That's proper trading. Waiting for the opportunity to step to you. There's something I wrote in my first book that has historically caught people. I know this because people write me all the time about having read my book, and they mention some people take the time to mention what really grabbed them. One of the things that grabbed people was this small little statement. Sometimes, in fact, most of the time, you don't choose your best trades. Your best trades choose you. And so you got 6 stocks looking at you. You're waiting. You're waiting for the one stock to step forward and say, "It's my turn, boss." That's how you trade. The novice trades like, oh, is there opportunity here? Is there opportunity there? Is it over here? Is it up there? Is it down there? Is it behind me? Where is opportunity? All over the place. The professionals here. Okay, which one of you is going to step forward first? Remember that. All right. All right. M Papi Crypto says, when you said professionals wait like a pro surfer waiting for the right wave, yes. Professional surfers don't catch every wave. That's absolutely true. And this applies to anything in life, right? Waiting for the right business opportunity, waiting for the right partner, right? Not selecting any and every partner, and not trying every possible scenario, waiting for the right ones to show up in the right place. This is quality. It's a quality approach that is not only for trading, but it's a quality approach for living your life as well. All right. How do I choose stocks, a stock watch list? I actually went over this today. I'll give you some brief clues as to how to grab a watch list. Right? I was teaching my traders today, and that you want price representation. So you never want, let's say you're going to build a 10 stock trading list, watch list. You don't want all 10 stocks clustered in the same price range. So you want price diversification, price representation. But you have to pick a price range. So let's say the price range is $30 to $120. Okay? That's your range, 30 to 120. So if you have a range, the majority of your range should be, the majority of the stocks should sit in the middle of that range. And then you should have some stocks sprinkled on the outer ends of that range. So the majority should be around $70. 70, 80, 60, 70, 80, like that. That's where the majority should be. Then you should have 1 or 2 above and 1 or 2 below. All right, that's number 1, price diversification. Number 2, you want You want sector diversification. So you might want, you might want a bank stock in there, one or two bank stocks, one or two chip stocks, one or two oil stocks, one or two metals, one or two big tech stocks, one or two socials, one or two transportation stocks, whatever. You want at least 4 sectors represented in the list. You don't want a list of 10 stocks and 8 of them are bank stocks. That's ridiculous. Okay. So you want price representation. You want sector representation. Then you want volatility. So listen, most people are afraid of volatility. Like everyone says, Oliver, Bitcoin's volatile. Exactly. That's where the opportunity is. We as marketplace, I want volatility. I can turn volatility into my friend. It's an enemy when you have no knowledge. It's an enemy. Volatility is an enemy when you're not skilled, when you have no knowledge, when you're not educated, when you don't know how to turn volatility into your friend. I want volatility. So you want price representation, sector representation, and volatility. You don't want a dead stock. You don't want a stock where every time you get into it, it's like watching paint dry, or watching the grass grow. Like you don't need that. Time is of the essence when you're trading, because if you're hanging in your trades too long, there's opportunity cost. There's other things popping off that you're missing. All right. And so you need volatility. And the way to do that is by average true range. Pick stocks that have a very decent average true range for their specific price range. And that's how you narrow things down. So once you get your sectors in place and you're in the right price range, so you've got your drug stocks, you've got your banks, you've got your chip stocks, you've got your big tech stocks. Now you've got maybe a list of 20, 30. Now you got to get those down based on the criteria of volatility. Maybe you have 9 banks, but you got to get down to 2. Which 2 have the highest volatility? All right. Maybe you have 4 chip stocks, but you need to get down to 1. Which one has the highest volatility? And that's how you come up with that 6 to 10. Boom. You sit there. You don't watch anything else. You don't look at anything else. You don't trade anything else for many, 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 many months. And then after that period, you do research on this list. Okay. What's my best performing symbol? What's my worst performing symbol? Which symbol delivers the biggest gains? Which symbols do I tend to have the biggest, most debilitating losses in? Which symbol is the most boring? Which one's the most active? You start to do, and maybe you'll replace 1 or 2. And over time, this process gets you to a core 6 to 10 that you don't change for years sometimes. I traded Apple every day of my life for 18 years. It's only recently that I stopped trading it every day because its nature has changed a bit. 18 years, every single day of my life. That's a professional. All right. Boss, could you tell us the story of how I discovered the Fantastic Four? Sounds like a great concept to me. Thank you. I didn't discover it. I came up with it. All right. So I came up with this concept called the Fabulous Four. It's the 4 most important things at the open of every day. And I was trying to find a way to get my traders to be able to understand off the open, where is your ceiling and where is your floor? Sometimes you don't have a ceiling or a floor. Sometimes you don't have a ceiling, but you have a floor. And sometimes you have a floor, but you don't have a ceiling. But there is one of them every morning. And so you can't start your trading day unless you know, does my stock off the open have a ceiling or does it have a floor? It can't. In some cases, it can have both, but we don't want those. We want to take our list of 10 and drill right down to which ones have a floor but don't have a ceiling, and also which ones have a ceiling but don't have a floor. Okay? And so once you can get to that, then you say, okay, I've got 3 stocks that have a ceiling and 2 stocks that have a floor. Okay? Then you take those 5 and you say, but which ones that have a ceiling are closest to the ceiling? And which ones that have a floor are right above the floor? Now maybe that's 3 of them. So you've taken 5 down to 3. Now these are the 3 you trade off the open. But you only trade them if they give you that first bar of velocity, of power, of oomph, because you got them originating from either a floor or dropping from a ceiling or moving up from a floor with velocity. Boom! And so traders that have a hard time, they don't know how to get down to the creme de la creme. And this is an important skill, traders. You have to know how to get down. You can't trade 10 stocks at the same time. You've got to be able to know which ones have the highest probability of moving with the highest velocity, the fastest off the open. What's the fastest horse in the game today? Coming from the right position. And so I came up with this neat little method called the Fabulous 4. Guys, you can look at, I'm not going to go over that today. I have videos on that on the channel. All right, talking about the Fantastic 4 or the Fabulous 4. I call it both things. Where if I get my traders focused on identifying the 4 most important things off the open, those 4 things make up this zone that is either a ceiling or a floor. And so I make them practice, grab the 4 things. Now, take the 4 things and make a box around it. That box is either the floor or the ceiling. Now, let's look for things near the floor and let's look for things near the ceiling, near their ceiling. All right? If the stock has a ceiling, is it near the ceiling? If the stock has a floor, is it near the floor? I want stocks dropping from their ceiling and I want them going up from their floor. Does that make sense? All right? These things, guys, are not in books. They're not in articles. They're not in Facebook chat rooms. You understand? This is 38 years of professional trading experience talking to you. All right? All right. I hope this helps. A good question here. J7 loves me. How do you push yourself forward when you find yourself reverting back to your demons? You push yourself forward. I do want you to understand that I think that it's easier to keep going. I think what you're asking is, how do you just keep going when it seems like you don't make progress? You make progress and then you lose it all again. And you make progress again and you lose it all again. How do you keep going? I think that's what you're really trying to ask. And I think I can understand the frustration with this because it was my frustration. And it was more of a frustration than it should have been because I didn't have anyone to tell me that had already traveled the journey, who had already arrived at mastery. I didn't have someone to tell me, Oliver, that is exactly what you need. That's the purification process. That you need the back and forth. That's actually growing you. That's actually maturing you. The fallback and the comeback. The fallback and the comeback. The fallback and the comeback. That this is the process of growth. Think of a stock that goes up and then comes back down, up and then comes back down, up and comes back down. At a certain point, it stops doing that and it breaks out or breaks down, right? But that back and forth is purifying the stock. It's getting rid of the people that don't have the patience. It's getting rid of the people that give up too easily. It's getting It's accumulating the people who believe in the stock's future by sitting there doing this. Those who don't deserve the stock leave. Those who don't believe the stock leave. The stock is being purified of all the people that doesn't deserve it. And then when all of them are gone, boom, stock breaks out, runs to the upside. That's sideways back and forth. Go up, come back, go up, come back, go up and come back. That is accomplishing something. I've always explained it like this to my traders. I call it the dirty rag concept, right? Let's say you have this little solution, a little tub of water. You put some cleaning solution in the water and you've got a dirty rag. Now you take this dirty rag, right? You drop it in the water and you pull it back up. Now it might be imperceptible to the eye at first, but the rag is not the same. That in some infinitesimal way, the rag is a little cleaner. You just don't see it. Then it goes down again in the water. And then you pull the rag back up. Sorry about that. You pull the rag back up. It knocked my voice out. You pull the rag back out. Boom. You still don't see anything. But you're not the same. The rag is not the same. And you keep doing this. Down, up, down, up. And after a variety of them, after many of them, you start to see some minor differences in the rag. But if you don't stop, no matter how long, how many times you get it and then come back and lose it, get it and lose it, get it and lose it, rag up, rag down, rag up, rag down. If you never stop, one day, this rag is pristine, clean. I never had someone tell me that. I realized that in retrospect, my time would have been better. My depression would have been less. My hardship would have been easier to bear. My cross would have been lighter. And so these are some of the things that made me want to do what I do. I do this for nothing. I do this to leave behind a legacy, to leave a body of work that can help people that were just like me, that didn't have the background to get a job on Wall Street initially. I did not have the right last name. I did not have the right color. I did not go to the right schools. I did not have the right parents. I did not have the right bank account. So I had only my passion and trial and error, which is a very expensive way to learn. But it was terrible. And it was hard, and it was painful, and I wish I didn't have to experience it that way. And so I'm out to make sure you should know that you're getting it and losing it, getting it and losing it. Good. Because what you have to be concerned with is losing it and losing it and losing it, and the getting is never there. But if you get it and then lose it again, and then you get it again and then lose it again, you're doing good. Just keep doing that. Just the fact that you get up, you fall, but you get back up. My God, do you know how many people don't ever get back up? All right? So just the fact that you come back, just the fact that you don't quit, just the fact that you're there the next day again, or the next week, or whatever. You lose an account, your account goes to zero, you go back to work, accumulate some savings, and you come back, good. You're not the same rag. You're not the same trader just because you came back. Do you understand? I believe in the people that come back. I have faith in the traders that come back. I don't care how bad you are. Right? You can't stay bad if you keep coming back. So keep doing it. Ben says something is sizzling. Yeah, that's my lunch. I've eaten nothing today yet, guys. Nothing since 8 o'clock last night. So, all right. Wow. J7 loves me says, wow, thank you so much. I had a bad trading day and I feel much better. I appreciate that. I appreciate that. And I'm very glad that you feel better. I will tell you this. Bad trading days can be extraordinarily high reward days if you make them so. And so you can't just let a bad day go by without cracking it open and finding specifically why it was bad. Now, it may not be your fault. There are bad days that are not your fault. But if you can find a fault or two, pull them out. And you know what? Pick the biggest one. And you know what you can do? Start off do 8 trades without committing that fault. And you've pretty much cracked it. The real number's 20, but if you can get to 8, it's weakened. You see, an error needs you to feed it to stay strong. A bad habit needs constant repetition to get stronger and stronger and stronger. You know, when you hear people that are suffering from a bad habit, it's because they do it all the time. And the killing of a habit is to find ways or hacks to do it less, because a habit needs food to live. It needs, and its food is repetition. It doesn't have strength without you repeating it. It needs you to repeat it. And so if you can find what was the cause of this bad day, the biggest cause, it might be 2 or 3, but the biggest cause, because you can only work on one at a time, take that biggest cause and say, my only mission in life is to do my next 8 trades without committing this error. It is not to make money. It is not to have a successful trade, although I will try. No, my number one goal is to just not commit this, and you starve this sucker to death. You understand? And you do this one error by one error by one error until you start searching like, wait, who's next? What demon is next? What bad habit is next? What stupid characteristic is next? I'm ready for you. You know what I mean? You'll start searching for them because you'll know that, shoot, every time I kill one, my trading jumps, you know? Thank you, guys. Thank you. Right. All right. Michael says, discipline is difficult. All right. And? Okay. I agree with you. It's far easier to not be disciplined, right? It's far easier to not go to the gym. It's far easier to eat what you want. And it's far easier to not wake up early in the morning, you know. But okay, so what? You know, I don't, you know, sometimes, guys, and I appreciate that comment, by the way. I'm just using the comment to bring this point home. I get this all the time, but Oliver, it's hard. It's hard. Isn't that hard? Okay. And? Dude, life is hard. Everything's hard. Being good at anything is hard. Being the best is hard. Being the top is hard. Achieving success is hard. Freaking living life in today's world is hard. It's not as hard as it used to be. So, you know, from an evolutionary point of view, things are getting easier, but life is hard. Like, I don't know what book your parents had you read, but let me tell you something. My parents taught me that life was hard. I did not get raised by parents that, oh, you know, yeah, oh, don't worry. You failed. Oh, that's okay. Here's a trophy. I didn't get raised that way. I didn't get trophies for failing. I didn't get pats on my shoulder because I didn't make it. You know, my father was like, that was terrible. You will never, Oliver, you can't repeat that because you will never make it in life. You repeat that, do not make that a habit. I'm telling you. All right. You're going to get killed doing that. That's how I got taught. I taught that it was hard. I taught that my parents taught me that I had to be better than everyone else, that it wasn't good enough to be the same, that I had to fight for the ground that I wanted to be mine, and that it was going to be difficult, and that the odds were against me. My parents taught me that the odds of life are against you. Oliver, you want to be successful, but it's going to be hard. And guess what? You're probably not going to make it. The odds are against you. That's what I was taught that way. So my parents raised me to go out there and just fight, bite, struggle. And hard has nothing to do with it because you assume that everything is hard. And I mentioned this to you before. I am glad trading is hard. That's what makes it so freaking special. Who wants to be good at something that everyone can do easily? And you say, what do you do? I'm a professional trader. I'm a professional trader. Everybody's a professional trader. Come on, give me a break. You don't want that, right? It's sort of like saying, what do you do? I walk. What? I walk. Everybody walks. So what's so special about that? Like, dude, you want what you do to be hard. You want what you do when you say you do it. People are like, wow, really? How? How did you get there? What did you do? You want it to be hard. Right? Because if it's easy, it's probably not worth achieving. Haseen says, actually trading is enjoyable because it's unpredictable. Yeah, some people, I guess you're very special in that regard because I think that most people think they want what is predictable. But I do think that life has more spice when you have to assess the odds and the probability of certain outcomes occurring because there is nothing certain. I think life is most interesting when it's not certain. But we're all kind of, in a way, looking for certainty. All right? But yeah, I agree with you there. All right. Carlos says, my wife needs to hear what you just said because she also trades with me. Thanks, Oliver. You are amazing. See you in July in Barcelona. Nice. Looking forward to you guys. Speaking of that, guys, let me just show you. I am in the midst right now of what I call my Freedom Tour. And I do want to show you this just in case any of you are interested in that. I want to show that to you. All right. So I am in, what is that? So Miami's over, as you can see. I'm in Sao Paulo, Brazil on the 14th. All right. So that's going to be great. I believe we're sold out there. And I'll be back in Medellin on June 4th, 16th in Spain, Barcelona. All right. And on the 10th, Cancun. So I think we're sold out of Cancun or getting there. Sold out of Sao Paulo. Barcelona still has some seats, and I'm sure it'll be sold out in Medellin. All right. So, guys, listen, if you're free, if you're available, if you can come join me, let's get together, but live. Let's spend time together. Let's learn together. Let's trade together. Let's eat together. Let's have some wine together. I told you that's my weakness, right? All right, guys. So just in case you're interested, that's tourolivervelez.com. All right. Just make sure you're speaking to one of my people. That's very important. All right. All right. I'll take like one or two more, guys, and we'll see. Oliver, how to know if pullbacks after elephant bars are viable? Typically, let me do this again. I'll do this again. I'll bring you to. Ooh, what was that alert? I will bring you to. Let's see here. Full screen. So I'm going to just draw here. All right. So let's say, for instance, you're getting this power bar surge off the 200. And typically, and let's say it starts pulling back from here. Now, typically you want it to hold the halfway mark. That is your healthiest, okay? That is your healthiest, when it holds the halfway mark. When you start to break down this halfway mark, if you lose about 80% of it, you have to assume that this bar has failed. All right? And certainly if the entire bar has been taken away by the drop, it's over. But the 80% of it is enough, actually. All right? And so the best scenarios hold the 50%, but that's in anything, guys. That's in anything. So you see this run up here? You see this pullback? Now this is the halfway mark. This held the top, right? If it broke down here, it's likely to do something like that. So as you can see, when you finally, it's the move after every pause. So there's a pause and then there's the next move. Now here's the halfway mark of that. When you break that halfway mark, it's over from there. Now, if you look at the move all the way down, check this out. Watch this. You've got this move from here. So we drop, and then we go here. We don't violate the halfway mark there. We drop here. Let me show you this. So we drop from here to there. Now, what's the halfway mark? About right there. We bounce up to the halfway mark and drop. Now, let's take the halfway mark here. We bounce up to the halfway mark and we drop. Now, let's take the halfway mark here. We bounce up to the halfway mark and we drop. Do you see? Now, let's take this. You see this drop? Now, where's the halfway mark there? But this breaks it. So now, that's your potential bottom. See? The first time the halfway mark was broken, we haven't really seen any significant lower pricing. And so this is the case in multiple bar runs. It's also the case in a single bar run where you cut that in half. And if your stock starts pulling back on you, you want that to hold the top half. All right? I hope that helps. All right. Where would you guys be with me? No, I'm only teasing. Well, kind of. All right. All right. I'll take one more, guys. One more. Let's do this. Let's do this. All right. So I'll take John. John came in a little late, but I'll take his question. John Costello's asking, I tuned in late, so you probably already talked about this, but I didn't. That's why I'm taking it. But do you think that a market crash will happen in the near future? Well, John, everyone, anything is possible. And we are in uncharted territory. I did mention earlier that no one has seen this confluence of events all come together at the same time like this ever in history. We've read about these scenarios individually, and some of the scenarios that we're dealing with now, we've experienced. I've experienced a bear market before, but I've never experienced a scenario where we have a freaking war that can truly ignite into the destruction of the entire planet. We have just come off of a global pandemic. We have experienced the highest inflation in 50 years. We've got China going into a lockdown again, which can further disrupt the troublesome supply chain. It's so much uncertainty, and we have experienced a scenario in which there was so much liquidity in the market that all assets, all paper assets, rose to ridiculous valuations. And so all cycles reverse. Could we be in for a crash? Maybe. But I will tell you this. Many things have already crashed. Let me show you this. This is important. A lot of people tend to miss these things, but we have already crashed. Do you understand? So take a look at this. Take a look at this for a second. So take a look at this. We were just looking at Mara. This is what percentage of a crash? 85 to 18. What percentage is that? It's freaking crazy, right? Let's take a look at Facebook. And let's look at it from this perspective. Now look at this, guys. Let's look at Meta. All right? Now take a look at this. This is pre-COVID. That's before COVID. We're under. This is billions upon billions of dollars that have crashed. Okay? Liquidity has been removed from the system. Okay, take a look at this. You can take a look at something like Peloton, of course. Look at this. Pre-COVID, we are under. Look at billions upon billions of dollars out of the system. That's called a crash. Do you understand? We can go on and on and on with this, right? Baba, pre-COVID, below, out of the system. You know, and it's, you know, it's just all over the place. What's Netflix? Yeah, NFLX, right? Pre-COVID. Billions upon billions of dollars out. So this has happened already to many, many, many things. And what's amazing is that when you look at these things like this, and then you look at BTC, you see pre-COVID here. What's done better? Meta, Baba, Netflix, Peloton, PayPal, Square, Twitter. What? What's done better? This is held up better than almost everything out there. Do you understand what I'm saying? And so you've got to put things in perspective. So people say, I don't see how Bitcoin's a store of value. What are you talking about? Look at all this destroyed value. Look at PayPal's destroyed value. What are you talking about? There's pre-COVID right there. That's not a store of value. This has stored the value. You know, this has done it. That has done it. Boom. Look at that thing go. You understand? So you've got to be able to put things in perspective. And the way you're supposed to look at this is you're supposed to look at this on a logarithmic scale. So now look at how it's retained its value. This is pre-COVID. And all this is, guys, I'm telling you, all this is, watch this. I'm going to show you. All this is another one of these. Look. It's just happening at a higher rate. It always happens at a higher rate. And the doubting happens here until this. And the doubting happens here until that. And on and on and on we go. You know what I'm saying? So my point is, in response to your question, is that we have already crashed. So the question is, can we have more of a crash? Yes, but we can. But I want you to think about this, because I think this is important. This is how I want you to think. If something, remember I told you to cut everything in half. So if a stock has moved, right? Let's say a stock has moved from, let's just make it easy, 0 to 100. Where's the halfway point? 50. Now, the stock has moved from 0 to 100. It's now at 30, right? Can you lose as much as you lost? No. Does that make sense? Like if a stock has gone from 0 to 100 and 50 is the halfway mark, and you're now at 30, you've lost $80. Can you lose another 80? No. So what's better to do down there? If you like it, start accumulating. Use the declines to pick up cheap inventory, because you're now mathematically at a place where your downside potential is smaller than your upside reward. Now, let's take it further. You got something that's gone from 0 to 100. The halfway is 50. It's now 30, which means that you've got 30 points to 0. But what's the odds of a multi-billion-dollar organization going to 0? Not very high. So going to 5, not very high. Going to 10, okay, maybe, but 15, okay, now better. So now, okay, get to that price where I can maybe see another 50% from 30 to 15. So now you make 30 to 15 your accumulation zone, and you divide that accumulation zone into 3 parts. So the top third, you start accumulating light. You get into that middle third, you accumulate medium, and then that bottom third, you start picking up the size of your accumulation, and you accumulate in zones. You don't play like a freaking ABC kindergartner. Oh, I'm going to put everything in at this price and hope I hope I picked the right price. There's a million prices out there, but I'm going to only choose one. That's not how you play. That's not how you accumulate for wealth, you know? You've got to accumulate ranges. You sell ranges and you buy ranges. But you've got to be able to come up with what's a range that has limited downside. And that's how you do it. All right? So if we take this to Bitcoin. Bitcoin's 69. It dropped to 36. All right? Now, could it drop to 0 from there? No. Back to 10? I doubt it. I doubt it. That's very unlikely. 20? All right, okay. 25 more like it. So now I've got my accumulation zone, right? I'm at 36 and 25. That seems like a good accumulation zone. So now I'm going to place orders down that zone. You understand? And I'm going to start off light at the top, medium in the middle, and heavy toward the bottom of it. That's how you do this professionally. You get to a place where you see limited downside compared to the upside, and then you create an accumulation plan. And you stage in. You don't have singular price risk. You have zone risk. And this spreads your risk out over a wider zone, which is a safer way to play the game. All right, traders, I love you to death. I love these sessions. These are great. Some of your questions are just freaking amazing. I love it, man. I've got some smart cookies out here who follow me. Listen, I want to thank you once again, traders, I want to thank you for following me. I want to thank you for smashing that like button. I want to thank you for turning the notifications on and clicking all notifications. That not only helps the algorithm, it helps you make sure you don't miss anything that I put out, guys. I spend a lot of time making sure something is put out to you almost every single day. So if you haven't already, please subscribe. Please turn the notifications on. It's very important. And let me know what you want to hear next. Let me know what you want me to talk about. Let me know what topic is important to you. Stay in touch with me on Twitter, all right? Instagram, Facebook, but Instagram and Twitter definitely the most. Twitter is where I'm actually more active, taking your questions. And I'll see you next time. All right, don't forget, if you're free, join me on my Freedom Tour. That is tourolivervelez.com. And I'll see you next live Q&A. Boom, boom, boom. All right, traders, ciao for now. I'm going to go eat now. Ciao.